Good morning. You're watching The Market right here on 18 Hour with me, Aisha Faridi, Aman Dabash, Nikunj Dalmia in the studios, and absolutely flat once again. That's exactly what the global cues are pointing towards, or at least that's how the GIFT Nifty is absorbing the global cues this morning. Yesterday, we just ambled around that 19,300 mark, although closed off the peak of the day. But yeah, once again, Wall Street has managed to eke out a decent gain overnight. Bond yields have seen a slip, and Brent crude continues pretty steady as we speak right now. So that's pretty much the global picture. And nowadays, we're often finding that disconnect between what the globe is doing and what we've been mapping.
You know, if I have to speak the market in, let's say, cricket terminology, I think it's a maiden over right now. Where you manage to just, I mean,
really looking forward to the World Cup.
Yes, this time I'm preparing myself. This time I'm really preparing myself. But athletics is where all the action is.
The sporting world.
Exactly. So if you talk in terms of athletics, I think it's one step forward, one step back. Nothing beyond that.
No
you're pretty much
sprinting.
jumping. You're not sprinting, you're pretty much jumping in the same place. The good bit here is that if you look at the global setup, and even though you can argue endlessly that, okay, what has been the impact of the Jackson Hole summit, and how come there is no panic whatsoever? That's largely because global markets are telling you that they are confident that growth is coming back, which is a far greater comforting factor than inflation, which is manageable. Bond yields have not stretched themselves. They're still at 4.2. Dollar index, this is the watchword here, 1.4, and the VIX is at 15. So from a global market standpoint, the Jackson Hole event has come and gone. China slowdown, the worry continues, and I think it is pretty much status quo. So nothing damaging, nothing alarming, nothing which is called as a trigger, and nothing which in a sense will just generate upside momentum. So what you have from the global market, I guess, is a stable regime. And when you have a stable regime, then Indian markets, then traders would say, okay, global, nothing wrong. Let's look at local cues, and then let's chart our own course. You start depending on global cues when the news flow and the terrain changes. Right now the terrain is stable. Yeah. And with the terrain is stable.
And there are no local cues, to be frank, to work with.
Let's look at the local setup. And I'm just looking at data in the morning, and you look at the top 10 heavyweights and where the top 10 heavyweights have moved. In this month, which is about 3.5 weeks now, 8 out of 10 stocks have fallen. And that's the month-to-date change for RIL, month-to-date change for ITC, month-to-date change for Reliance Industries. With the exception of Infosys, which is the, it's more like a dead cat bounce there. All the heavyweights are falling. Now, the Nifty is not cracking, but the Nifty is not going higher. Since the Nifty is not cracking and it is finding support at lower levels, and there is no alarming situation, there is hardly any intraday volatility on a big range now. Markets are migrating towards small and mid-cap stocks. I'm not saying anything new. I'm pretty much endorsing what we've been endorsing. And within that also, can you imagine, it is PSUs. I never thought.
PSUs all the way, but the non-bank PSUs, just take a look at the gains. Yesterday maybe we flagged off some of those defense stocks, some of those railway stocks, and really the returns speak for themselves. If you look at it on a year-to-date basis, triple digits in the case of names like Mazgaon Dock or a Titagarh Wagons from the railway space, gaining 260%. We recently interacted with the management of that company, and then those power stocks are certainly powering ahead, 109% gain, for instance, for an REC. So what's going on here, Nikunj?
Aman, I mean, this in a sense is the most intriguing part of the market. I mean, these were the official ugly ducklings of the market. The only sector which you wanted to avoid for the longest period of time pre-COVID was PSUs. Nobody owned them, nobody liked them, they did not create a lot of shareholder value. Then came the turn which started with defense, then came the turn which started with railways, and then PSU banks, which were cheap, they were benefiting because of cycle. If you frankly have to ask me that, I'm not saying that nothing is happening in PSUs, things are happening in the PSU space, but the pace of change in some of the PSU stocks in terms of price performance, I think is somewhere you need to be slightly more careful. See, a lot of PSU sectors are going through fundamental changes. For example, defense, railway capex. Changes are happening on the power space. Big changes I think have happened, if you frankly ask me, in the PSU banking space. But a lot of the action in the PSU stocks now is capturing in the change. So the rate of change I think is getting captured. My only worry is that right now there is a frenzy, at least at the retail level and at the HNI level. So what should be the strategy, just as a broader approach? 3-year plus, the standard answer is nothing to worry. And I genuinely feel 3-year plus, there is nothing to worry because the cycle will elongate itself. But if you are in for a 3-month or if you are in for a 6-month, then you got to ask yourself that what is next. I think from these levels, the P multiples for PSUs are unlikely to expand. If the P multiples are likely to expand, they could be the first port of call when the market volatility kicks in. So I will not be surprised that whenever market downturn starts, the downturn this time could be led by PSU stocks. So the choice you got to make is that if you can digest a 15-20% volatility, a 20% downside, then be with them. If you are a hand-on-heart trader, if you want to take some chips off the table, then it will not hurt you if you take some chips off the table. I mean, the sensible risk management would be take some chips off the table, wait for a decline. But if you can digest a 20% volatility, if you're bad at market timing, then just stay put.
And then, of course, you have big giants, or rather the heavies, like a Reliance, wherein the AGM turns out to be pretty much a non-event. I mean, like one of the brokerages, Nikunj, said categorically, the focus is on long-term value creation. There's no taking away from that, but it fell short of near-term value unlock expectations. Disappointed the market in that sense.
Yeah, markets sometimes expect that, just because it's in Reliance AGM, they'll deliver the moon. Yeah. But to be very frank, a lot of news flow actually came on the heels of the AGM. Geofinancial listing and the retail unlocking of the...
And somewhat the succession plan too.
I mean, the hint is that Mrs. Ambani has stepped down and now the siblings and now the next generation is part of the board. Yeah. So when a conglomerate like Reliance, and when you're looking at a succession planning there, it has to be a thought out and it will be a multi-year process. But the first hint is that the next generation is now part of the board. They would be taking active interest in the business. Our understanding of the active business is that how demarcation has already started in terms of what the next generation is looking at. So from a market standpoint, I don't think succession planning was something which they were looking forward to. From a market standpoint, I guess where you can talk about a pinch of disappointment would be that geofinancial, nothing specific came out. Nothing specific in terms of what's next. It was all the big picture, vision which was shared. So the stock had run up, unlocking in geofinancial has happened, Reliance retail unlocking has happened. So AGM is not a forum where you would expect anything more. And I think it's turned out to be a normal AGM rather than an exciting one.
Yeah, the disappointment though played out in the stock after a flat better part. It finally fell 1% on closing. But what about some of the global commentary coming in overnight? Vinny has been scanning through all those notes. Vinny?
Good morning, and let's start with the commentary that is coming from Mohammad Al-Arian. Now, he's talking about the issues, that 2% inflation target that the US has to reach. And he said that's the key issue, right? And what they're looking at right now is the possibility that the headline inflation might come back up as well. And as it always comes back to service and wages, and that'll be a concern that they are watching out for. And the real issue is whether they've broken the house market. So these are some of the key highlights that he's giving in terms of their inflation target also, which, the US does want to achieve that as well. Also, in terms of the yen exchange rate, we've seen the depreciation coming in the yen currency as well, and that is what he's highlighting, that the yen exchange rate against the dollar is back to the levels that prompted the foreign exchange intervention in the past as well. And now what he believes that the more Bank of Japan actually delays these exits, the greater the range of possible complications will come in, and the higher the risk of adverse cross-border spillovers is something that could come in. That's the commentary that's coming in from Mohammad Al-Arian. Now let's move on, talk about Lawrence Summer. Now he's highlighting in terms of the Fed. He said that the Fed has actually regained the credibility of making radical policy adjustments of a kind, and almost no one expected that, and that many people are counseling against that as well. Other than that, we have commentary that has actually come in terms of from the US Commerce Secretary, that is Gina Raimondo, and what she's highlighting is that they have stressed on the importance of the stability between ties of China and US, and how important that is actually to be stable and the healthy competition that is there, and they have no intention to hinder China's economic progress in terms of the growth there. But that's the word that has come in from the US Commerce Secretary as well. And lastly, we have some commentary that has actually come in from Goldman on yen, and they're saying that the yen will weaken to levels that they've not seen in more than 30 years, and if the Bank of Japan sticks to its dovish stance, then that is something that they are watching out for as well. So let's keep an eye out on special commentaries that is coming in on the yen as well.
A lot of commentary there coming in on the yen as well as all that's going on across the globe. Thanks very much, Vinny, for summing that up for us. Let's move right on and discuss our markets and levels. We've got Kunal Bothra right here with us in our studios as well as Vinay Rajani joining in. Kunal, we've retreated something like 3.4% off our recent highs. Just what's the view on the markets given the fact that it's clear leadership within the broader universe? What do you make of that?
Good morning, Avan. So, there is leadership amongst the broader market, the mid cap and the small caps, which have been doing exceptionally well. I'll use the word exceptionally because in the last 1 month, you've seen the large cap stocks a bit more staggered, but then the mid caps and small caps have not just outperformed or gained in terms of the indices, but the way many of these small cap and mid cap stocks have behaved. Many of these stocks are up 40%, 50% in just the last 2 to 3 odd weeks. So that's a very strong gain which has come back into this index. But on the other hand, over the last 3 or 4 weeks, we've seen different textures on the indices. Initially, we saw a sharp downtrend or a downtrend which led to the index changing its range from 90,800, 20,000 to 90,500, 90,800. Now we are into a very tight range of 100 odd points for the Nifty, where 19,300, say plus or minus 100 odd points, remains to be a tight range for the index. So as of now, from a very short term view, over the next couple of days, I don't see any major trend coming up into the indices. We should just be meandering into this 100 point plus or minus 9,300 mark.
All right. That's the view coming in from Kunal that it is going to be a range bound. Munir, do you concur with that?
Yeah, so Nifty is hovering around its 50 days exponential moving average, which is placed at 19,285. So we have seen a 700 odd points correction in the Nifty, and Bank Nifty also underperformed. But if we look at, as we have been discussing, that small caps and mid caps are performing, and there are a lot of trading opportunities there in the overall broader market. And as we see, there are 83% of the stocks which are trading above their 200 days moving average in NSE 500, which is a very good sign. So as of now, index is into a consolidation phase where 19,250 odd level is a strong support, and we will turn bullish on Nifty only if Nifty is able to cross 19,500. So this 200, 300 points range is there where Nifty is consolidating. And as far as Bank Nifty is concerned, 44,000 to 45,000, this is a 1,000 point range where Bank Nifty is oscillating. So we need to see whether these levels are breached or not. But frankly speaking, looking at the overall strength of the market and breadth of the market, it looks like that anytime soon Nifty and Bank Nifty will break out on the upside only. So I am optimistic about the markets. No doubt their indices are not performing, but keeping a stop loss say 19,100, I would remain bullish in Nifty, and in Bank Nifty I would keep a stop loss at 43,900. So I'm optimistic about indices also from here on, and anytime soon we may see a short covering rally in indices like Nifty and Bank Nifty.
Let's talk stocks as well. Kunal, what's on your list?
So I'll go for a buy on Tata Chemicals. That's a stock which I believe is heading towards a 9 to 10 month breakout about the 1,050 mark. So I'll preempt that breakout for Tata Chemicals, suggesting a buy with 1,200 as a target, stop loss at 975. And the second would be a buy on Paal Enterprises. I've been bullish on the stock, gave a breakout yesterday above 1,100 mark. So would suggest a buy, 1,200 as a target, stop loss at 1,040.
Vinay, what about your stock ideas?
Yeah, so my first idea would be IRCTC. So one of the railway stock, PSU stocks, which has started outperforming after a long time. Long consolidation was there, and it has given a breakout in yesterday's session with a volume. So it is a great confirmation about this particular stock. In previously, this stock has given a fantastic return to the investors. But after a running correction and we can say consolidation, this stock has seen a fresh breakout. So IRCTC can be, one can go long in trading at 678. Stop loss can be kept at 660 for the traders, and on the upside I'm expecting a target of 705. And on the second pick would be Tata Chemical. As Kunal has also suggested, there is a breakout after a long time, and consolidation breakout is there. So my view is also matching with Kunal. I will go for the Tata Chemical, which is trading at 1035. Stop loss can be kept at 1015, and upside target could be kept at 1060.
Recommendations coming there on Tata Chemicals from our chartist. But Kunal, you flagged off Paal Enterprises, and that is exactly the first stock that Anisha is going to talk about. She's right here with us in our studios to discuss the top stocks. So let's start off with that one. Yesterday, some buyback details emerging, and let's just talk about the way forward as well as the financial metrics.
Oh, well, yeah. So yesterday the company held its analyst day, and of course there was a lot of important takeaways that came through, reiteration of a lot of targets. But overall, if you look at it, the commentary is quite positive, even though the the brokerage community maintains the underperformed stance purely because the stock has run up almost 45% in the last 3 months itself. But let me talk about the details that came in from the investor meeting. They are talking about that they're looking at growing their asset under management and doubling it over the next 3 to 5 years by FY25. They are looking at growing at a compounded annual growth rate of almost 15%. The retail AUM is which is going to drive the growth going forward. They clearly demarcated the wholesale versus the retail book that they want to keep going forward as well. And they're talking about a retail book of almost 85 to 90,000 crores and the wholesale book of around 35,000 to 40,000 crores. The net interest income ratio is also expected to improve to almost 8.5 to 9% going forward. Currently, it is around sub 6%, and the credit cost is expected to normalize at 1.7, 1.8%. So overall, quite a bit of positive commentary coming in. They're talking about how alternatives business as well as life insurance is something that is going to scale up for them going forward. But the big question, Nikunj, is the fact that stock has run up. It's not that it's that cheap as it was earlier. But now as well, do you think this is one of those turnaround stories, and with the entire focus coming back to NBFCs, this could be one of the winners?
So Nisha, 45% surge, market believes it will be a turnaround story. So what's been introduced and what's been spoken at the analyst day yesterday is something which markets were anticipating and expecting. Piramal has had a legacy problem with the DHFL. If that is getting sorted out, next 3 years versus last 3 years for Piramal would be strikingly different. Their wholesale book now seems to be stabilizing and retail focus seems to be kicking in. But can Piramal really take a next leap in terms of getting technology and big data in it? Because frankly, very few companies have managed to break that kind of a break that kind of intent overlay. Everybody is claiming that we do genuine technology and technology-based data lending, but frankly, excepting Bajaj Finance, I don't think there is a lot of evidence of any companies which have managed to do that. I think there is a very specific mention of technology usage, and I know they're investing a lot in terms of creating a technology, back lending. If that is the change, then the perception and the P multiples for Piramal actually would change. B, at the current juncture, you would say that the stock is pricing in what we've heard from the analyst day, because the price to book has become 3.5 times. It's not cheap. It's no longer an underperforming stock. Now it's about delivery. Now it's about functionality as to how the retail book would move and how they're able to embrace technology. Nisha, we don't realize it, but I think Piramal so if you look at the stack of the total net worth of real estate NBFCs in India, Piramal is in the top 5. So they really have a large size and a net worth on which they can really start operating. So is this one of those moments where a Piramal last 3 years versus next 3 years would be different? I hope so.
Yeah, looks like it, because the way you pointed out that the levers are in place now. The proof of the pudding will be in execution, and that's what we'll wait out for. But the execution is something that we're waiting for Indiabulls Housing as well. That too is a bit of a turnaround story. Of course, yesterday we brought you the exclusive story that the company is looking at a name change. They're looking in expanding their portfolio as well. But now there's more details coming in overnight, wherein they're talking about loan repayment. So that's another important lever coming in, that the company has achieved large debt servicing in Q2 of this year itself and has repaid almost 1112 crore worth of bond in the last month itself. In fact, the debt position now is down to about 36,000 odd crores, and if you look at the net debt to equity, that ratio is also 1.8x, which is quite comfortable for a lending arm. Overall, the company reiterated that it's entering a phase of positive ALM going forward, so that's the asset liability matching, etc. The loan portfolio inflows is also likely to continue. So overall, positive commentary coming in from here as well. Nikunj, this is that turnaround candidate which perhaps Street has not fully factored in. Piramal is probably done. The story is played out in terms of stock performance. Maybe not so much in Indiabulls, you say?
See, Piramal is ready to take a giant leap forward. And I think in case of Indiabulls Housing, it's a new birth.
Yeah.
There's a big difference in terms of where the positioning of the business and the business cycle is. Indiabulls Housing, they had to contract their balance sheet. I'm not getting into the historical reasons, but they had to contract their balance sheet. They were not lending at all. Now, if they change and they start lending again, the pocket which they represent, which is the entire housing business, I guess there they can really scale it up. But will they scale it up? Will they go for scalability, and will they be judicious enough in order to take care of their, entire NPA concerns which have happened in the past? That I think we'll figure out in next couple of quarters. The only thing I want to flag off with Indiabulls Housing is, and just to bring to our audience here, is that it's a heck of a volatile stock, and it can swing both ways. We've seen the downticks in Indiabulls Housing Finance followed by upticks in Indiabulls Housing Finance. And I think, Kunal, it is already in F&O ban?
Yes, it's been in F&O ban since long.
Yeah, it's been in F&O ban since long. So to caveat the points which I've just said here, I would like to add that extra element of volatility, which in a sense is the intrinsic nature of the stock, how it would actually behave. So what they're doing in terms of fixing the house, taking a rebirth, starting the operations again, it could be a sizable, it could be a differentiated business because they've survived the storm. It's a new birth for them. But the underlying layer of volatility in the price action, what happens in F&O, is where you have to actually, wear a mask and even fasten your seatbelts. It's just one of those.
Yeah, absolutely. After that 10% ride that you had on Indiabulls, in fact, in the last few odd months itself, it's been a solid 35% move, and that's the move coming in yesterday. But Anisha, thanks for highlighting those two stocks. Keep them on your radar. We'll take a very quick break on that note, in fact. But here at ad from Saurabh Mukherjee from Marcellus. He believes that the Chinese economic slowdown will weigh down on commodities.
China blowing up, the implosion in China, the fact that they're struggling with GDP growth, with exports, with employment, I think that has massive implications. It's almost inevitable that the Chinese economic slowdown will exert massive deflationary forces across the world on commodity prices, on oil prices. I'm not so sure central banks or the bond markets are reflecting that just yet. China's economic boom over the last 20 years supported commodity prices. I think China's economic unwinding, perhaps its economic collapse over the next 10 years, will have a deflationary impact. As and when that becomes apparent to bond markets and to central banks, I think the narrative that we are close to the top of the interest rate cycle will solidify, and therefore the jitteriness that we see around interest rates, I think will abate over the next 12 months.
Saurabh, everybody's excited about the way our financials are moving. It's a consensus view, and it's a space where the growth, I think, is evident. But somehow, if I look at the performance of financials, and especially for large cap banks, they've been quite numb this year. The contours of growth are favorable. The valuation stack is exciting and not stretched. Yet the price performance in this year for the large cap banks has disappointed.
I think part of the reason for that is the funding conditions are reasonably easy for the lending ecosystem. So whether I look at NBFCs or the banks, raising money primarily CASA money or indeed wholesale market money has been reasonably easy. And whenever you have that, Nikunj, whenever getting access to funds is reasonably easy, it's very difficult to separate the men from the boys, the women from the girls. What we will need is some sort of shock in the system around either loan losses, around some development of bad news around credit quality, for the market to differentiate between, say, the HDFC banks and Kotak banks on the one hand, and say the PSUs on the other. At the moment, the market is saying, why should I buy private sector banks if the PSUs can deliver stellar profit compounding quarter after quarter?
Hi, morning. I'm quite intrigued to see that you're actually calling specialty chemicals as a preferred sector at a time when just about every player has come out there and given a guidance card, talked about a gloomy scenario. Is this a buying the fear strategy?
No, so specialty chemicals, I think people aren't drawing the distinction. Agrochemicals, China is dumping globally. Agrochemicals are therefore under pressure. So, for example, we don't have SRF, but I think it's a high-class company. The SRF management has been clear that China is dumping, and that's exerting pressure on SRF's profits. But in pharmaceuticals, medicines for human beings, there is a shortage. America is going through a massive shortage in, for example, oncology drugs. In contrast media is the stuff we have to consume before an MRI scan. And therefore, what we are seeing is the API space. The API space supplies into the pharmaceutical space. And the intermediates which go into APIs, there is no global glut there. We are not seeing price pressure on API. And as I've said several times on your show, Aisha, China makes 70-80% of the world's API.
Welcome back. Let's put the spotlight on all the stocks in news, and a whole host of stocks will be in focus on the back of block deal action today. Let's take it across then to Sharad to identify all those names. Sharad?
Well, yes, at first today block deal is expected coming in for APL Apollo Tubes, where promoters will be likely selling almost 0.85% stake in the company. Now this is coming at almost a 4% discount to the current market prices. Apart from this, yesterday also the important block deals were announced, and we'll look at what the important absorption has been there. Firstly is Zomato, where Tiger Global offloaded an entire 1.4% stake, and of course the value was more than 1,000 odd crore rupees. But the absorption was coming in from key financial players such as Societe Generale, Morgan Stanley, Goldman Sachs, as well as Axis Mutual Fund. Apart from this, Star Health also was in focus, where 3 FIs actually sold on a combined basis more than 1,300 crores worth of stock. But the key buyers in this deal included ICICI Pru Life as well as Fidelity Group, where at a combined level both of them acquired 3.7% stake in the company. Apart from this, minor deals also we did check about it, and we saw NRB Bearings, where promoters have been increasing the stake, and they have roughly increased the stake almost by 3.5 lakh shares over the last 2 weeks. And also secondly, Strides Pharma Sciences, where Morgan Stanley has acquired roughly 0.25% stake in the company, while the promoter was the seller. And lastly, I would like to point out a QIP issue opening, and that is coming in for PG Electroplast, where they'll be raising roughly 500 odd crore rupees, and the floor price is set at almost 1,641 rupees per share.
Right, Sharad, we'll leave it at that. In fact, Bank of America has also released a note on auto stocks, hoping that the festive demand is going to boost, and that will start kicking in from next month itself. Lisa is here with all the details. Lisa?
Well, yes, so BofA has come out with a report on autos, and this is pertaining to the August auto retail sales. So let's look at the segment one by one. Both PV as well as the two-wheelers, they are trending at mid-single digit growth on YTD basis. But the hopes are on for a festive season boost from September onwards. Moving on to two-wheelers, soft August was seen on the back of seasonality, but Hero, that slipped on the market share gains. Moving on to PV, they said that it's not a tight market anymore, but market share gains was seen for Maruti. And moving on to CV segment, Tata's has come back on the share gains. So, well, if we look at the August retail sales, that was weighed down by the inauspicious period as well as monsoon breaks, but there was a shift in the market share gains. So that's BofA on the auto sector.
All right, thanks very much for that, Lisa. Let's move right on then and hear it out from Nishchal Maheshwari, the CEO of Centrum Broking. He shares some of his top fundamental stock ideas. Listen in.
Other stocks which we like is PNC and HG Infra. So that is the stocks which we like basically as far as construction is concerned. But overall, if you look at on the capex side or the capital goods side, then I think there are some good stocks basically even in the smaller category. Triveni Turbine we continue to like basically, and then Apar Industries is what we like. So there has been quite a few smaller ones also which still continues to be fairly priced, not very aggressively priced. So these are the stocks basically which we like in the capital goods sector. Yes, the order books have been very strong.
Okay, bunch of other stocks which are going to be in focus today. We've already highlighted Indiabulls Housing, the debt repayment on the company. They've already repaid about 1,112 crore rupees of bonds. So look out for what that stock does. Although it's in F&O ban today, but suffice to say, after that big tear on Indiabulls Housing yesterday, today also you could see some amount of follow through. Sun Pharma is the other one, and the management commentary on the sidelines of the AGM has been extremely positive. They're expecting to achieve high single-digit consolidated top-line growth for FY24. Vinay, just wanted to understand where your preferences lie on the long side within the pharma pack.
Yeah, so Sun Pharma you have been talking about. So Sun Pharma is into a correction phase, but primary trend is quite positive. Recently, we saw that the previous top resistance of 1065 was taken out, and I think that level will act as a strong support. So there is a semblance of support around 1060 to 1080 in the Sun Pharma. So considering the primary trend, I think pharma space can do well, and Sun Pharma is one of the heavy weighted stocks and which is looking extremely good on the weekly and monthly charts. So medium to long term horizon, it is very good. And on dips, one can accumulate 1060 to 1080 is a strong support where we can expect demand to emerge. And as far as pharma sector is concerned, I also believe that pharma against the Nifty has underperformed since long. No doubt we have seen a new all-time high in Pharma index recently. But if we were to look at the ratio chart against the Nifty, it is still down significantly from its 2015 peak. So I want to mention here that Pharma index can continue to outperform for medium to long term, and any dips should be buying opportunity in the pharma sector.
All right, fair enough. Meantime, Kunal, wanted to get in your take then on some of these mid-caps that really stood out in yesterday's trading session. Balrampur Chini, for instance, which crossed above its 200 DMA, and there was also something like a Lakshmi Organics. What do the charts look like? Do you track them?
Yeah, Lakshmi Organics is something which I do track, and that's also on my mid-cap list. My sense is that the stock is coming out of a major correction. Then I think October 2021, the stock was almost at 600 levels. The very recent lows 2-3 months back for Lakshmi Organics was around 240 odd mark. Yesterday's move was a classic breakout price volume candlestick for Lakshmi Organics, and I think that's one of the major reasons why I would be very bullish on the stock for the near to medium term, and expecting that this could be a big turnaround in play for the stock. Even for Balrampur Chini, the stock is looking a bit more staggered on the trend. The charts, in fact, for Praj Industries are looking much more better. The stock has come out of a 1.5 year of consolidation. So Balrampur Chini, I'll wait out for a breakout, possibly about that 415 mark, which could be a breakout point of a major consolidation.
A bunch of stocks which were very active in trade yesterday. Of course, while Indiabulls Housing, Paal Enterprises, they were the ones which were topping the charts. But we've been highlighting as to how it's the PSU pack and the non-banking PSU pack, which also has been really firing all cylinders. So BHEL, that's been a very strong one last week. And yesterday too, the stock made a move of nearly about 4% in trade. 109 is what you're reading on the charts now. Kunal, further up move you think on BHEL?
Yeah, very much. I am extremely optimistic and bullish on BHEL. So, Aisha, this is a way for many of these PSU stocks, not just the PSU banking names. We've seen what has happened to the power names like PFC, REC, and then that getting translated to the other traditional power stocks like NTPC, Power Grid, where these stocks have broken out of their 5 years, 10 years downward sloping trend line or a major downtrend and come out of a major consolidation. BHEL is one of the stock which has come into a very similar kind of a chart pattern. The stock breaking out of a major downtrend. I think it's almost an 8 or a 9 year downtrend somewhere from 2013-14 for BHEL. The stock has confirmed a breakout. 100 was a major resistance for the stock. It tried to go through a touch and go movement multiple times over the last 1.5 odd year. Failed to cross over those levels convincingly, but this time around the breakout seems to be a lot more sustainable for BHEL. So would be extremely optimistic, and typically my sense is that whenever these stocks come out of an 8-10 year of consolidation or a downtrend, we are not looking at a couple of weeks of uptrend. We could be looking at least a 2 to 3 years of uptrend.
All right, meantime, just want to flag off some brokerage notes. Yes, we have already spoken about these stocks, but Paal Enterprises, CLSA, still maintains its underperform rating, saying that the term M&A has been maintained several times in the management, but the underperform ratings largely on the back of the low ROE and the sharp run-up that we've recently witnessed in the stock price. Deven Choksi as well is joining in on the show. Deven, why don't I start off by getting in your thoughts? A lot of long-term growth projections, profitability targets that have been divulged yesterday by the management of Paal Enterprises, but brokerages still erring on the side of caution, and they've maintained an underweight rating or an underperform rating. What's your view on Paal Enterprises?
Good morning, Evan. Well, obviously, I think the roadmap is basically made very clear. And that is a good part, because generally I think this is expected that whenever the company's business model is basically showing some signs of a growth and management gives clarity on the top of it, that gives, I think, good amount of confidence. I'm not too sure about, I think, how market reacts, I think, immediately on such kind of announcements. But in my viewpoint, I think if you are looking at the long-term view on the business of the company, then probably I think you got required clarity from the management of Paal Enterprise. And given that kind of a situation, I would rather think that one could possibly keep counting on the possibilities of how exactly they will implement some of the initiatives that they have talked about. And given that kind of a situation, I think long-term investment point of view doesn't change, but at the same time, more clarity which has emerged, which can possibly be implemented in the portfolio over a period of time. Immediately, we don't have any recommendation on this particular stock, but as we are looking into the company, we find that I think the merits are demanding to look into this company from the point of view of adding into the portfolio.
Devin, what did you make of Reliance's AGM? While the focus sure is on the long-term value creation, but it sort of fell short of, near-term unlock expectations that perhaps the market had.
So likewise, I think the AGM has also given a good amount of clarity for the growth in respective verticals. I think the star of the entire communication, probably I think the vertical, which is geo platforms. Transiting from a mobile company to a complete technology company is a narrative which the management has set for this particular business. And that inspires the confidence because on one side you have low hanging business of mobile telephony, which is anyway generating about 1,20,000 crore worth of revenue and 50,000 crore worth of EBITDA. Now, this particular business is getting transformed to a complete home solution business in which you have different verticals in it. I think be it the media, the entertainment, e-commerce, education, healthcare, gaming. Each of these verticals physically, I think, are being given the complete direction. I believe that I think because of the home connections getting included into the expansion program, this is going to probably result into higher amount of consumption of data and at the same time, I think, business for the company. Along with that, the enterprise solutions are also being talked about. And in that, I think the technology blocks, they have about 14, 15 different technology blocks on which I think the company is operating currently. And for the enterprise solution, along with the cloud computing, along with AI, AGI, the artificial intelligence, along with MR, AR, MR, I think these are some of the technology blocks, I think, on which the company has already talked about opening up this particular thing for application development. In my viewpoint, I think Geo platform could possibly show the double the amount of revenue and the profits in next 2 to 3 years time. And that is where probably I think one could argue that as against I think normal growth of doubling the size in 4.5 years. Now the company is talking about doubling the size in Geo platform in 2.5, 3 years time. So which is fundamentally sounding absolutely very good music to the ears actually if you ask. Along with that, I think the other areas of business also being talked about very systematically, particularly in the renewable segment. All the 5 verticals in the renewable segment are given a separate group, along with compressed biogas business, I think, which is now taking off the ground. So in my viewpoint, I think this is one area where again, I think you are going to see larger growth. But I think on the other side, if you are looking at near-term outcome into the numbers, they are not going to be very dramatically changing immediately. Maybe I think if the roadmap is suggesting that the company could grow faster into consumer-facing business, which is the Geo platform, the retail and Geo financial services. These businesses could possibly grow, I think, at a compounded rate of growth of around 20%, whereas oil to chemical and oil and gas exploration business, I think, could grow in the vicinity of around 10 to 12% kind of a growth rate. So this is what I understand from this particular company. Maybe long-term outlook is clear. Immediately, one will have to take an opportunity to buy these stocks when the market gives one at the lower prices.
Taking a look at some of the Nifty 100 movers in trade yesterday, you had something like a Lupin as well, which scaled up about 3%. Muthoot Finance was active, L&T, Vedanta and M&M. Those as well have been some of the interesting movers. Curious, Kunal, to get in your take then on some of these select names. What's the chart of M&M looking like, and have you had a look at Muthoot Finance?
Well, yeah, I think bullish on Muthoot Finance and Manappuram Finance, but specifically Manappuram Finance, I would probably prefer that as a much better bet. I think the stock has come out of a major downtrend, huge retracement. I think a 50% retracement has already happened for Manappuram Finance. That's a stock which I do like on the charts. And the first stock which you mentioned was
I spoke about M&M.
M&M, yeah. So even M&M, I think in fact it's one of the strongest names so far from the auto pack in this last 3-4 months of uptrend at 1500 plus levels. The stock is sustaining the previous major highs. Now we try and compare this with even the likes of Tata Motors, Maruti, the two-wheeler stocks like Bajaj Auto, Eicher, Hero MotoCorp. These stocks are nowhere close to their previous highs. So I think the only two names which are performing exceptionally well is actually M&M and Escorts, and both of them have very strong bullish charts.
Okay, that's the view coming in on M&M and Escorts as well as Muthoot and Manappuram. Meantime, Deven, wanted to understand what your outlook is when it comes to the entire non-banking PSU basket. If you had to pick and choose stocks within the power space, defense and railways, which would they be?
And I think I always maintain that the PSU companies are great businesses, and I think the models are absolutely, I think, robust. Up till now, I think these companies have been suffering largely because of inconsistency of the commitment of the management, and largely due to the fact that I think in PSU companies the management changes I think would take place very frequently. Given the situation that in current environment, government is spending maximum amount of money on infrastructure building, and given the situation that the government is putting equal amount of emphasis on bringing the accountability into the PSU companies, I would think that I think at least I think those gaps which were there up till now, I think they are getting corrected in PSUs, and that is where I think one could argue that higher amount of order intake for the PSU companies, given the kind of expansion that the government is making in the economy on infrastructure side, and given the fact that there is higher amount of accountability of the management, some of the PSU companies could possibly show relatively better performance going forward, and hopefully it will be consistent and sustainable. So if that is so, then some of the PSU companies, I think, which are so, I think many of them have already done up ahead of time. They look promising from the point of view of investment. And I would believe that I think the companies connected with capital goods segments, companies connected with infrastructure segment, railways and defense, definitely I think I was giving a larger amount of trust, but with a lower margin. So they also look reasonably good. But more importantly, I would be very keen to look at companies which are in the mining space. I think the companies in the mining space could possibly show relatively better performance, given the kind of thrust that the government is putting across on this particular subject. So overall, it appears promising. Maybe one will have to remain selective instead of generalizing the entire PSU baskets.
There is finally an upgrade on PVR. Better than expected movie performance. Content pipeline remains strong and healthy for the mid-October festive season. Diversified content reducing cinema risk. It's like this trend within a trend, the footfalls and the moviegoers. And trust me, for the last couple of movies I've gone for, you can feel the vibe. वो पहले हाउसफुल का जो बोर्ड लगता था, you can actually see that. Yeah, it's like old times 3 to 6, 9 to 12, the traditional single screen experience of movies we went for. If the show was full, they would actually put a house full board outside.
Except now you're shelling out thousands for popcorn versus what we did years
And of course, then there's no house full board because you don't go there because you're online, you know that tickets are not there. But it is such a big change which has happened. It is such a big change which has happened.
Yeah, but it's unfortunate that it's so content specific. I mean, even the stock moves up when you have a hit movie. So, it's almost a box office indicator now, the stock.
There's cyclicality actually in that business. But now the thing is, it becomes the go-to stock because there's only one because of the merger of PVR and Inox. So could this be one of those concept or consumption stocks where you would say, I want to buy it on a bad patch, or I will not buy it because Cricket World Cup is around the corner. So I don't know what will hold true. But all I can say is that if there is one trend, there's one trend which is clearly visible, I think is the moviegoers and the footfalls. Interestingly, a lot of multiplexes are also in malls now. So could this lead to an uptick in mall footfalls? I mean, picture dekhne jaoge, you'll end up eating, you may end up just going to the restaurant in the mall, maybe a little bit of binge shopping, window shopping also. But Phoenix Mill in that same breath, let's look at the 1 month change, YTD change, 1 year change. I mean, Phoenix in a sense is the largest independent listed mall player, I think, in India. 1 month change 4%. This year, Phoenix Mills is up 25%. Devin Choksi, could Phoenix Mills be a good idea?
Honestly, Nikunj, not even given that particular thought in that much of detail. Only thing that I find very interesting is that I think the kind of mall properties that they have been building, and at the same time the brand that they have been attracting, it suggests that I think they are at the premium end of the business, and probably I think they should continue to sustain. But as I said before, I think haven't looked into the valuations at this point of time, and neither looked at, I think, the projected financials for the company. So would refrain from giving any outlook on the subject at this point of time.
Say Rudramurthy joins us now. Rudramurthy, good morning. How are things?
Very good morning, Nikunj. Doing very good. Hope things are great at your end too.
Thank you very much. When you say things are great, are you referring to markets or something else?
No, markets has been definitely more boring at index level, but you have a lot of opportunity stock specific. When I say Nifty is just in that no trade zone. On the lower side, you have support at 19,200, and on the upside, yes, resistance is kicking in at 19,500 zone. So it is just at this 300-point tight band of 19,200 to 19,500. Let it break either above 19,500 or below 19,200 before we start taking decisive trades on index. Similarly, if you see Bank Nifty, again, it is in the 1,000-point band, 43,800 to 44,000 around as strong support. And at the higher end, you have 44,800 to 45,000 as the resistance. So we have been in this tight band now for last 2-3 weeks, and it is consolidating for more time here, but very stock specific opportunities are available both on the long and short side. So I would be rather stock specific than trading in index. Let the direction in index be decided by market, and then I will take positions on the same.
Zomato, that's the other stock which we've been highlighting. And a bunch of block deals really happening in some of these sort of newly listed names. And Tiger Global was a seller, and they've sold their entire 1.4% stake at 91 rupees per share in Zomato yesterday. Remember, there was a sizable block deal in this stock, so 92.35 is where it shut shop. Star Health, MIO IV Star has sold about 0.5% out of the 2.69% stake at about 610.2 rupees in Star Health. We're going to be chatting with the management as well in the due course of the show today. So these are a bunch of stocks which are under radar this morning. Devin, just wanted to get your sense in on Zomato, PB Fintech, way off from their last year lows, but do they make for good buys now at these levels?
I think a couple of things are happening. Those investors who have been wanting to exit the company, they are exiting now. And as a result of which, I think that overhang, which was up till now affecting the stock price, is slowly and gradually receding away. That is a first technical point. On the other side, the fundamentals of these companies have started showing some amount of improvement, and to a greater extent, I think one would say that because investors started asserting about the profitability of the business, the managements have also, I think, remained vigilant about spending money. And as a result of which, I think one is seeing the good amount of corrections in the strategy, and the profit is given the first preference, vis-a-vis, I think, growing the size of the company. So I think that is giving a good amount of confidence, particularly likes of Zomato, where I think the corrective strategies are taking place. Undoubtedly, the potential remains very large as far as I think the business is concerned. But whether I think they would be all converted into the profits in a near future, I think one will remain a little bit thoughtful about it. They recently started, I think, the newer revenue model, which suggests that I think on every order they would be collecting the fees, which is probably, I think, giving some kind of a promise as far as I think the outlook is concerned. But whether that fee would be meaningful in next couple of quarters, I'm not completely sure. However, having said that part of it, I think this businesses looks interesting. They've scaled up, they've put across the technology to the front, and I think they are now showing the signs of, I think, registering the profits. Though the other valuation parameters and the earning outlook, or earning ratios rather, I think would take little time, I think, before which I think one could count them completely into it. But at least the downside is protected now, as I see it.
Well, some more stock ideas, and this time from Dipin Mehta.
What we feel are good emerging growth stories within the banking space. We like IDFC First Bank. It's been our favorite in the banking sector, and clearly I think it would be a great compounding story. Within the engineering space, we like Praj Industries. It's a quality player, and with the way we are seeing the trends towards environment and environment-friendly fuels, clearly this company has an edge over there. When it comes to software, we are very positive on Tata Elxsi still at these levels also. it remains amongst the best performer. And although it's been a great value creator, I still feel that the best years are ahead of Tata Elxsi. Maybe not in terms of growth rates, but certainly they can scale up from these levels or so. Within the auto space, we have discussed Eicher Motors still remains our top bet over there.
Kunal, how would you approach PSUs in general now? As a category, and then will be specifics.
I'll be very bullish on it, and even now, even from current levels, and if you talk of specific spaces, for example, power stocks, power finance names, PFC, REC, these stocks have broken out of a 10-year of major correction. And you know, when stocks come out of a 10-year, 13-year of correction, we are not talking of 50% upside for these stocks. We are talking of at least another 4 years of uptrend for these names. Look at what's happened to the entire defense space. The move looked to be more exaggerated in second half of 2022, but these stocks have gained at least another 50% higher from those levels on a respective basis. GRSE, Mascot, Dow, Cochin Shipyard, etc. These stocks have done exceptionally well. The other spaces like BHEL, BEL, even these stocks have managed to come back into strong momentum for themselves. Power stocks, the traditional power names, NTPC has come out of a 5-year, 7-year downward sloping trend line. Power Grid is looking very attractive. These stocks have changed their beta for themselves. So when I look at the entire space and as a whole, I think the momentum seems to be into this space. There are very few pockets of underperformance. I think if I'm not wrong, just the likes of maybe an NHPC, NBCC, I've not seen the price performance relatively, but it says that they don't come out to be top performers every now and then. So I think these are the only pockets where there is some sort of underperformance from the PSU pack, but largely extremely bullish on the space.
Devan, what is it that you make of possible turnaround stories like Indiabulls Housing, right? They've already repaid over 2,200 crore rupees as of last week. They've cleared all $3 billion of ECBs as well. And from what we understand, not just they're looking at a name change, but they've also applied to the regulator to become an NBFC. Do you think this is a case that one could look at?
Well, honestly, I think the kind of restructuring moves that they have taken, they are suggesting that they are in for some serious business turnaround, and that is definitely, I think, given the kind of changes that they are making. However, how much impact it will bring in the near term to long term, I think I'm not very clear at this point of time. Maybe furthermore deep into the subject will be required before which I think we can comment on this subject.
Let's look at the turnaround stories of this year. Zomato, 50 has become 100. Tata Motors, similar kind of an move. The third turnaround story, well, Piramal, 40-45% higher. So it's been a year where you may talk about the Nifty doing whatever it has done in terms of a single digit gain. But the turnaround stories in some of the prominent companies which belong to the club of $5 to $10 billion, that's why you have to always hunt for some of the turnaround names. You've had Paal Enterprises, Tata Motors, Zomato, Policybazaar, Paytm. To some extent, I would also say Maruti actually. I mean, it's been a turnaround year, so to speak. What else, Kunal? What's been the turnaround story for you this year? PSU stocks. PSUs turned around in 2021 actually, Asha. 2020. That's the time the BLs and the BMLs of the world, they started coming back. I mean, defense was hot in 21 and 22 and 23. I'm talking about...
But I think the big move has only come in this year.
I think big move in percentage terms would have come this year.
There were three staggered phases, I would probably put it. 21, as you rightly said, that the likes of BEL, HL, they managed to move up higher. Second half of 2022, I remember very clearly, PSU banking stocks went to, I think, a 60% or a 2x, 3x gain. Maharashtra Bank and J&K Bank, many of these banks moved up higher. Then in the last 2-3 months, you've seen the likes of BHL, etc. They've also started to pick up pace. NTPC, PFC, REC. It's just that in the last 6 months, these stocks have seen a breakout.
So in technical terminology, like you were discussing trend tested, and you said the RSI is stretched like never before, and you are these levels where correction today or tomorrow will come.
Correct.
In that same vein, if you have to talk about PSUs, what are the RSI levels for defense and railways?
It's still at 75s and 77s. Manageable, still very manageable.
So still more upside.
Yes. They don't look like a top out candidate, at least as of now.
Devan, what should one do? Look, you got this great rally. I'm not using the word frenzy in PSUs. The temptation to not sell, I think, is there because you may miss out on the absolute gains. But if you don't book now, how is the risk-reward ratio stacked up for PSUs in general and railways and defense specifically?
So while undoubtedly on one side, the huge amount of potential for this company exists, and given the thrust of government on infrastructure spending, I think most of these companies are right in the middle of having significantly large amount of business execution possibilities. So there is undoubtedly, I think, this kind of a great opportunity that one can talk about. However, I think in the near term, if the stock prices peaks out faster, then possibly I think it will languish for a longer period of time. One important aspect is that I think most of these PSU companies, they work on a very tight margin. And if any slippages are there in the operations and the performance, probably I think you have a disappointment on the earnings front. That is one particular caution that one would like to exercise. At the same time, I think today, if I see year ahead, I think as far as I think the election 2024 is concerned, in my report, I think this 1 year time, which is likely to remain, I think, extraordinarily buoyant market condition for India markets particularly, in which most of the laggards are likely to perform. And that could be an opportunity if they somehow or other, I think, start picking out on the valuations. I think it would be an opportunity to catch them in subsequent period of time. I'm not in hurry to do that rather, but I would rather keep an eye on it. Somewhere in 2024, end of the first quarter or in the beginning of the second quarter, I would rather like to, I think, book profits into some of these companies which are rallying faster compared to their earnings. That would be the opportunity time at that point of time. As of now, it makes sense to stay invested into this company, given the kind of swing that we are experiencing in the business condition that these companies are at this point of time.
Which went below its 200 DMA. One of Saurabh Mukherjee's favorite actually. Pidilite Industries. And let's look at Asian Paints also. These are two stocks which have been great multi-baggers over the years. But in this year, Pidilite has given no return. In last 1 year, let's look at Pidilite. In last 3 years, let's look at Pidilite. You have to, the stealth underperformance and time-wise correction will kick in some of these stocks and we may not even realize it. Last 52 week, Pidilite is down 8%. Similarly, Asian Paints in the same spirit where crude prices have been more favorable in last 1 year rather than more damaging. Last 3 years, yet Pidilite after 1 year of underperformance is up 73%. Let's look at similar pattern at Asian Paints. In last 3 years, Asian Paints on a large base has still given a 66% return, even though it was like an expensive stock. And it is a stock which in a sense was trading at elevated P multiples. But in last 52 weeks, which is the last 1 year, both Asian Paints and Pidilite, they are the I would say they are the cult stocks, if I may use the word, from the consumer space. And they've entered into time-wise correction. And C. Rudramurthy, Pidilite, Asian Paints, they both are, Asian Paints is getting rusty. It needs a facelift. Pidilite is not sticky enough. It needs something new now.
Yeah, see, for me, Nikunj, stocks like Pidilite or Asian Paint are always wealth creators. No doubt for last 1 year time horizon, because of high valuation, these stocks might have not given good returns. But still for me, for a retail investor, staying in stocks like Pidilite or even staying in stocks like Asian Paints are much, much better compared to, let us say, we were now talking about India Bull Housing Finance. We are all telling the stock has moved up from 120 to 190, a 50% kind of a return. But we have forgotten the same India Bull Housing Finance from 1,000 rupee, a 4-digit stock, came to 2-digit, not 3-digit, 2-digit, and 90% of the wealth was destroyed by these stocks. So for retail, for trading, it's a different ball game. Buying India Bull Housing Finance with a risk management or a stop loss, exiting at higher level. But for me, stocks like Pidilite and Asian Paints are always wealth creator. So for me, Pidilite might be another 5% kind of a correction from current level. Closer to 2,250 will be a great buy. But as a momentum trader for short term, definitely I will not buy Pidilite. But for investment, it looks very good. Might be a 5-10% kind of a correction from current level. And even similarly, if I see Asian Paint, strong support for this stock emerges closer to 3,000 rupee. So closer to those levels, I will definitely buy. And I will definitely advocate people to stay away from counters like India Bull Housing Finance or even for that matter, Zomato. We are talking of Zomato moving up from 50 rupees or 48 rupees to levels closer to now 90 rupee. But we have forgotten it is still below the IPO price where it came from. So I will still advocate people to stay with Asian Paints, stay with Pidilite if you are a retail investor, than going into Indiabull, Housing Finance and Zomatos.
Quick look at what the pre-open rates are indicating this morning, and looking at the screen, it's just about flitting between the green and the red for the Sensex, and for the Nifty, there we are at 19,380, up about 0.4%. Let's find out what those mid-cap strategies are. What is it that our chartists are betting on? And Kunal, what's looking good today?
So Lakshmi Organic, something which we discussed earlier, that's a stock which I would recommend as a buy. It managed to break out of its 200-day moving average. Price volume breakout for the stock, and I think a 5-month swing breakout for the stock price on the short-term chart. So would suggest a buy 303 as a target and stop us at 278.
All right, and Rudra?
See, for me, India Cements has made a base formation and it has given a breakout above levels of around 235. At current price of around 240, offers a great risk reward for me to buy India Cement. Stock can move towards levels closer to 275, 280 kind of a zone. Keeping a tight stop loss of 230, I'll be looking at initial targets of 275 on India Cements.
All right, let's move right on and tell you about some of the other top stories that we're tracking. Deven, thank you for taking time out and joining in. Well, the U.S. Supreme Court has set the trial date for Donald Trump's criminal election interference case, and this is for the March 2024 in Washington, which will put the Republican presidential candidate on trial in Washington, D.C., 7 months before the general elections. And over a phone call with Prime Minister Modi, Russian President Vladimir Putin said that he would be able to attend the G20 summit. Russia will be represented by the country's foreign minister instead. The Kremlin announced that Putin has got a busy schedule and the main focus is still the special military operation in Ukraine. Meantime, shifting gears, the iPhone 14 Pro Max has emerged as the most shipped smartphone for the first half of the year, showcasing a shift in consumer buying habits towards the most high-end devices. In Jan to June, the iPhone 14 Pro Max shipped 26.5 million units, the most out of any model from any manufacturer. Meantime, the former Chief Operating Officer Dhruv Dhanraj Bal is exiting Bharat Pay in September, according to ET reports. Sources say he's moving on to pursue his entrepreneurial passions. Meanwhile, he's also likely to establish an early-stage investment fund. And after landing on the moon, India is now shooting for the sun. That's right, ISRO's solar mission Aditya L1 is scheduled to launch on the 2nd of September at 11:50 a.m. From Sri Harikota, and this Aditya L1 is going to study the coronal heating and the solar wind acceleration with mass ejections in the sun's atmosphere and what effect that has on the Earth.
Is the khabar. To get the latest khabar on D Street, on Oberoi Realty, let's go to Sharath.
Well, yes, in focus we are having Oberoi Realty, and what we are gathering from the street is an important Pokhran project which is in Thane region that is expected to be launched next month. Now this is an important development coming in, especially before the pre-festive season announcements start coming in for the real estate players. Now apart from this, also the important thing is that this project in Thane is likely to be monetized for the next 15 odd years, and also at first in the first phase itself there will be roughly work will commence on 5 towers, which compromises of roughly 1800 odd units. Apart from that, the Kolshet region, which is also in the Thane region, which is a part of the Mumbai metropolitan region, that there itself it's expected that there will be a new product launches coming in for the both third quarter as well as the fourth quarter of this current fiscal. Now looking at the stock itself, it's up almost 35% from March lows itself, and there are certain medium-term triggers which will augur well for the stock, and they include an important tower launch coming for the Goregaon project, which is the Elysian project, and also for FY24 they're expecting the gross development value to come in roughly 12,000 odd crore rupees, which translates into a gross bookings of more than 5,000 crores.
All right, let's move right on then and revisit the stock on the editor's radar, and let's just revisit what we spoke about earlier this morning, Paal Enterprises.
45% surge, market believes it will be a turnaround story. So what's been introduced and what's been spoken at the analyst day yesterday is something which markets were anticipating and expecting. Piramal has had a legacy problem with the DHFL. If that is getting sorted out, next 3 years versus last 3 years for Piramal would be strikingly different. Their wholesale book now seems to be stabilizing and retail focus seems to be kicking in. But can Piramal really take a next leap in terms of getting technology and big data in it? Because frankly, very few companies have managed to break that kind of a break that kind of intent overlay. Everybody is claiming that we do genuine technology and technology-based data lending, but frankly, excepting Bajaj Finance, I don't think there is a lot of evidence of any companies which have managed to do that. I think there is a very specific mention of technology usage, and I know they're investing a lot in terms of creating a technology, backed lending. If that is the change, then the perception and the P multiples for Piramal actually would change. B, at the current juncture, you would say that the stock is pricing in what we've heard from the analyst day, because the price to book has become 3.5 times. It's not cheap. It's no longer an underperforming stock. Now it's about delivery. Now it's about functionality as to how the retail book would move and how they're able to embrace technology. So if you look at the stack of the total net worth of real estate NBFCs in India, Piramal is in the top 5. So they really have a large size and a net worth on which they can really start operating. So is this one of those moments where a Piramal last 3 years versus next 3 years would be different? I hope so. Enterprises, let's spend some time, because that's one stock where the price surge has been quite strong. Kunal, we've discussed this one. You've liked this one. Yes. Can Piramal do what, let's say, SBI did in 2021 or what Tata Motors has done in the first 6 months?
Yes, very much. So okay. I'm still very bullish on Piramal Enterprise. And when a stock comes, again, a data point which we discussed earlier on PSU stocks, when a stock comes out of a major downtrend, it's almost like a V-shaped recovery for Piramal Enterprise. 2 straight quarters of price uptrend. I think the previous low for the stock 2 quarters back was, I think, 600 or slightly closer to that 600 mark. The stock has almost doubled from those levels, but when you try and compare this with the all-time high levels, the stock is nowhere close to the all-time highs. Now, in the process of this last 2 quarters or 6 months of uptrend approximately for Piramal Enterprise, the stock has broken through a series of resistances. The initial resistances which you look out for is the long-term averages of 50 DMA, 200 DMA, and then more on the indicator front. All of that has been confirmed for the stock price. So I would frankly look at a retest of the previous major highs, which is I think the tune of 1700 odd for Piramal Enterprise, which means a substantial upside from current levels as well.
C.R. Rudramurthy, Piramal.
Nikunj, I agree with Kunal, and even what a fantastic stock for our viewers to just discuss on, which you have even taken it on our editor's radar. Really looks very, very strong, and for me this stock right now has a very, very strong support at levels closer to 950. So even for investment, this stock looks very good. Even for trading looks very good, available in F&O. So keeping that stop loss closer to levels of around 930, 940 zone, I will be a buyer at current level or on any dips to levels closer to 1000 or even closer to that 960, 970 zone if I get it, or else even at current market price, buy it, keep a stop loss of 930, and I won't be surprised if this stock can make a move towards that levels of 1600, 1700 zone. Great risk reward both for investment and trading, and a clear tick mark on the buy side for me on Piramal.
Stan, what are the index strategies coming in this morning from all of our chartists, and whether or not it's a consensus given how quiet the market has been of late? Pretty much across the board, it's a buy coming in from Kunal Bothra as well as our other chartists as well. What about the Nifty Bank? Let's bring up those strategies as well for you and show you what the consensus is on those. The Nifty Bank strategies will just come up for you on your screens as well. Okay, so it's a no trade pretty much across the board coming in from most of our chartists on the Nifty Bank as well as the Nifty as well.
All right, meantime, let's move right on and get in a take from you, Rudra, as to what the outlook is when it comes to the entire pharma space. If you had to pick and choose, which are some of the stocks that look attractive, mid and large caps?
Looks very, very strong among all the stocks available in F&O also, and this stock has made that clear breakout above levels of around 1100 and now clearly staying above those levels. Price action has been supported with good volume and the delivery based volume has been on the rise. So I will be a buyer in Cipla at current market price. Keep a stop loss of around 1200 and I am looking at targets of 1400 to 1500 can come on Cipla. The second best stock again from Pharma, if I have to pick, will be Sun Pharma. This stock again having made a big breakout above levels of around 1100. Now it is making that small consolidation and kind of a time-wise correction. So again at current market price, I will be a buyer in Sun Pharma. Keep a strict stop loss of 1080 on this stock and look at initial targets of 1200, 250 to come. So Cipla and Sun Pharma will be my top bets from Pharma.
Sun Pharma, the top idea is coming in from the Pharma pack. Kunal, evidently, what's looking like the strongest pack? I mean, would it be cap goods or would it be just the larger PSU, chunk at large?
So PSU chunk at large, of course, is something which is attractive. L&T is something which is attractive from the capital goods space. You have M&M, which is very attractive from the auto pack. So, Aisha, in earlier bull markets or strong trends, we used to categorize sectors which have performed exceptionally well, sectors where most of the candidates have given breakouts, but this time around it's a lot more differentiated. So if I pick out from large cap names, you're just having staggered names. Like for example, right now Axis Bank is one of the top performing private sector banking names as compared to the likes of behemoths like HDFC Bank, Kotak Bank, even ICICI Bank in that regards. So there are very staggered names over here. But the other basket which has performed exceptionally well, you can't call it as leaders, but then the mid caps and small caps, they've done exceptionally well and in such a kind of a raging bull market which is going on within the overall markets as such.
Okay, so that's the take coming in on where one finds strength in the market. But just 2.5 minutes left to go before we ring the bell for this Tuesday morning. And the global Q is pretty much a status quo. While, of course, Wall Street has had a decent handover for us overnight. Bond yields have managed to slip and Brent crude continues pretty steady around that $80 per barrel mark. So that's pretty much it. When you talk about the move across the global markets, you've seen about a 0.6 to a 1% kind of move pretty much across the board when it comes to at least the US equity markets. And it's important to see what Asia as well is up to, because there too you are seeing dots of green, with Hong Kong being the biggest mover. About a 2% move is what it's seeing. And Shanghai, considering all the stimulus steps which have been put in place, that index as well sees another jump of nearly 1.5% in trade right now as well. The periphery markets are green, but relatively quieter at that. Where are the pre-open rates settling in for us? So closer to that 19,400 print at least, just 26 odd points away from that. About a 0.3% gain is what the Nifty pre-open rates are indicating. Let's just revisit some of the buzzing stocks. Indiabulls Housing, of course, is going to be top on our radar, while the stock is going to be in an F&O ban today. But the debt repayment continues. The company has now prepaid 1,112 crore rupees worth of bonds as well, in addition to the 2,200 crore rupees that they've already paid. So let's see what the pre-open rates are indicating for this one. Sun Pharma as well, we highlighted the management commentary on the sidelines of the AGM. They expect to achieve high single-digit consolidated top-line growth for FY24. That stock is holding higher by about 0.7%. There's SJVN as well. The company's subsidiary has bagged an order worth about 1,900 crore rupees. That stock has also gapped up in the pre-open, 3% higher as we speak right now. Whirlpool, not such a liquid name, but the AGM commentary has been strong and the management is very categorically aiming looking to regain the market share as well. So that's another stock on our radar. And then, of course, there's JK Lakshmi Cement as well, wherein shareholders have rejected the proposal to increase the intercorporate transaction limit to about 10,000 crore rupees. That's going to be the other stock that we're going to be watching out for. Paal Enterprises, Reliance Industries, both after the AGMs yesterday, those also on our radar this morning. Paal Enterprises, of course, Axis Capital has downgraded it despite the optimistic commentary because of the recent run-up that has already taken place in the stock. And then Reliance, considering the short-term triggers were a little bit amiss at the AGM, much unlike what the market was anticipating, that perhaps there's going to be talk on the value unlocking process further. So the stock tanked about almost 1%. The first rates then on your screens, absolutely quiet, just skirting around that 19,350 mark. So pretty much in line with what the pre-open rates, or for that matter, what the GIFT Nifty was also indicating. That's quiet on the Nifty as we speak right now. Let's revisit the big movers first from yesterday. Let's see what L&T is up to after that big 2% move on the stock yesterday. L&T holds up another 0.5% higher, 2,700 on that stock. And I'll just highlight in M&M. So let's check in on what M&M is doing. It's comfortably above that 1545 odd level, 1553 now on M&M. Marginal uptick is what M&M is right now also seeing. Sun Pharma, a trigger-based move perhaps, 1% higher yesterday. Let's see whether the follow-through persists. 1124 on Sun Pharma. There's some bit of green there today as well. Power Grid, Maruti, Hero MotoCorp, these were some of the other large cap performers from yesterday, and they will just come up for you on your screens. Let's see what Paal Enterprises is up to. Yesterday, of course, the stocks showed big buoyancy, was up about 4.5%. Let's see what it's doing in today's trading session. That stock will just come up here on your screens, down 2.25% as we speak. Like we highlighted, brokerages are saying that, even though the AGM commentary is positive, the stock has already seen a sharp run-up. There's also SJVN, Whirlpool, JK Lakshmi Cement, some of the news-based stocks. SJVN has gapped up 4.6%. Whirlpool will just come off you on your screens next, and then JK Lakshmi Cement as well. That stock is holding higher by about 1% as we speak right now. Indiabulls Housing Finance, and I think we highlighted that, some bit of green on that stock this morning as well. What about the big movers from yesterday? India Cements, BHEL, GNFC. These were also some of the staggered movers yesterday, remember? So they will just also come off you on your screens next. Gokuldas Exports, they've entered into an agreement to acquire Atraco Group for about $55 million. That stock has gapped up 6% higher as we speak right now. The block deals from yesterday, Zomato, Star Health. Let's revisit those stocks as well and what they're up to in trade right now. And Zomato is another 7% higher, 93.15 now. Star Health 6.13 on that stock price. NBCC as well, they've got work orders worth about 66 odd crore rupees from the IMA, that's the Indian Medical Association. So that's another stock which is in focus this morning. And then, of course, there's the likes of RCF, NFL as well. Reports say that lack of investor interest has put RCF and NFL, OFS on the back burner now. Those stocks are a little mild in trade as we speak right now. And I think another block deal of 11 lakh shares on SJVN, that, of course, is a news-based trigger as well. Kunal, mildly positive start. Where does it head next? And of course, what trades are you punching in?
Yeah, it's an okay start for the indices. This is an expiry week, so the markets would be very busy with the expiry, the nitty-gritties of the expiries. But in terms of the stocks, there are a couple of stocks which I would, in fact, be very keen towards looking for an opening trade. One of them is AB Capital. The stock has come back towards a major support at the 180 odd mark. Looks fairly attractive. And also Tata Chemical, which is also looking very attractive. The stock has confirmed a classical breakout of a 10 to 12 month of consolidation for itself.
All right, Rudra, let's find out what exactly you make of the market open this morning as we're currently skirting around the 19,330 mark. And what would be the first trade that you'll punch in?
See, for me, even a 250 point kind of an up move in Dow Jones is not reflected in our market. Nifty is definitely showing that resistance at around 19,350, 400, having made a false breakout above that levels of around 19,550 and then coming below 19,350. So for me, this market is still a sell on every rise kind of a market. I am not gungo. You have to be stock specific, but the momentum on the downside is also missing. That will come only once we close decisively below 19,200 on Nifty, and on Bank Nifty once we make a close below 43,800. Now coming stock specific, India Cement was one buy call which I had recommended. That looks very strong. I want to have both long and short call. So if India Cement is on the long side, I would definitely pick up JSW Steel as a shorting candidate available in future. Crucial supports have got broken and now there is a last support coming to JSW Steel at around 770 to 773 zone. Once we close below 770, JSW Steel is headed towards 745. So I will advocate a sell on JSW Steel at current level. Keep a stop loss of around 790. Look at target of 745 to come on JSW Steel.
Just short of 5 crore shares have traded hands on Jio Financial Services. This continues to see some major amount of trading as well as mutual fund activity.